XRP is not going to climb in a steady, comfortable line that gives everyone time to get positioned. When the switch flips, when regulatory clarity locks in, when banks start using the rails that have been built and tested for over a decade, when tokenization volume starts flowing at institutional scale, the price action is going to be nonlinear. Violent leaps in short windows, trapped liquidity, short sellers forced to cover, institutions all rushing in simultaneously. That is the thesis from one analyst describing how utility assets behave when the floodgates open. And it matches almost exactly what Franklin Templeton's head of innovation described when she talked about what the future of your entire financial life is going to look like, and where XRP sits at the center of it. Today I want to walk you through 3 stories that connect in a way most coverage is not putting together. The Franklin Templeton wallet vision, the Morgan Mastercard Ondo live settlement that proved the XRP ledger is ready, and the Fed decision this week that killed all 2026 rate cut expectations, and what that actually means for XRP holders right now. Welcome to XRP Verified. Subscribe and turn on the bell. Let's get into it. Let me start with the Franklin Templeton clip, because Sandy Call, the head of innovation at one of the world's largest asset managers, describes something that I think every XRP holder needs to sit with carefully. Franklin Templeton manages over $1 trillion in assets. They have been building on and testing the XRP ledger since approximately 2018 and 2019, before the SEC lawsuit, before the recent institutional rush, years before most institutions were willing to touch anything Ripple-related publicly. Here is what Sandy Call described as the grand vision. She said, "The entire interface to your future financial life is going to be your wallet. Today, you have a checking account, multiple savings accounts at different banks, a brokerage account, a healthcare account, insurance accounts, retirement accounts. They are all separate. You cannot see your total financial picture in one place. You cannot optimize across them. Putting together your own financial picture is difficult. Actually using your assets efficiently is almost impossible because they are so disaggregated. Now imagine a single wallet where all of those accounts and all of those assets become interoperable, where you can see your total wealth picture in one place, where for every single holding, your operating cash, your savings, your investments, you can ask the same question. Am I optimizing this? Can I lend it? Can I put it into a liquidity pool? Can I stake it? What is the best use of this asset right now?" She said you will be able to set goals, maximize my buying power, save for retirement, and the wallet will optimize across every asset you hold to achieve those goals automatically. And then she said something that directly connects to the tokenization of equities and bonds. She said the NYSE, NASDAQ, and DTCC tokenizing regular stocks and bonds this year, even in a digital twin model rather than a fully native digital model, will force every participant in professional financial markets to put a wallet system in place. And having that wallet opens possibilities that do not exist today. Now here is why XRP sits at the center of this vision. Ashish Birla of Evernorth said it directly in a recent interview. XRP is the engine for moving tokenized value. It has a built-in exchange baked into the protocol, the native DEX, that most people did not know existed. The connective tissue Ripple has spent years building into financial institutions, the licenses, the partnerships, the regulatory approvals across dozens of jurisdictions. That is what connects this wallet vision to the real world. You need public blockchain infrastructure. You need settlement rails. You need a bridge asset that moves tokenized value between currencies and assets instantly. That is what XRP was designed to do. Franklin Templeton has been testing this for 7 or 8 years. They did not stop during the SEC lawsuit. They kept building. And what Sandy Call described this week is what 7 or 8 years of building and testing toward looks like when it is finally approaching deployment at scale. Now let me talk about what the Morgan Mastercard Ondo Ripple live settlement actually proved, because this is the most recent and most concrete confirmation of the vision Sandy Call described. In May 2026, Morgan, Mastercard, Ondo Finance, and Ripple completed the first ever live cross-border tokenized Treasury fund redemption directly on the XRP ledger. Not a demo, not a pilot on a test network. A live transaction, settled in under 5 seconds. The developer from Ripple X who discussed this in a recent interview made a point worth highlighting. He said, the pilot proved the XRP ledger has moved far beyond payments. It is now providing mobility for tokenized assets, the ability to move them, settle them, and connect on-chain markets with off-chain financial systems quickly and with low friction. He described what was proven, that you can do liquidity management around tokenized treasuries, that you can cash out a tokenized treasury fund internationally without the friction and multi-day delays of traditional finance, that JP Morgan's treasury operations, Mastercard's multi-token network, and Ondo Finance's tokenized assets can all interact within the same XRP ledger environment. The key phrase he used, we are not trying to replace existing financial infrastructure. We are upgrading it, unlocking what is already there without changing what is on the surface. This is exactly the distinction that separates XRP from the crypto projects that were trying to build a separate financial system from scratch. XRP is not replacing the plumbing. It is becoming the faster, cheaper, better version of the plumbing that already exists, plugging into JP Morgan, plugging into Mastercard, plugging into the DTCC, and making the existing system dramatically more efficient. Now let me address the Jake Claver 4-digit XRP thesis, because it is getting a lot of attention again, and I want to give you the honest, balanced take. Claver has said that if specific conditions align, the Japan reverse carry trade unwinding, a BlackRock XRP ETF launch, Tether experiencing problems, and the tokenization of the derivatives market, you could see 4-digit XRP in a short period. And if derivatives market tokenization fully plays out, he has mentioned $10,000 XRP as a possibility. Here is the honest assessment. The conditions Claver describes are real possibilities. The Japan reverse carry trade is a documented risk. A BlackRock XRP ETF is a logical next step in their digital asset product progression. Other concerns are a recurring institutional worry, and derivatives market tokenization on XRP rails would create demand at a scale that current prices do not reflect. But here is what the most credible voices in this space are also saying, including one analyst who has done extensive research on the reverse carry trade specifically. He cannot find a single Bank of Japan report, BIS report, or academic paper that connects XRP to a carry trade unwind scenario. The carry trade thesis makes intuitive sense as a concept, but documented institutional intent to use XRP specifically in that scenario, that evidence does not exist yet. What does exist, documented and verifiable, is the DTCC working group with Ripple Prime as a participant. The live JP Morgan settlement on the XRP ledger, Franklin Templeton building on XRP for 7 or 8 years, the Clarity Act approaching a Senate floor vote, 9 spot XRP ETFs with over $1 billion in inflows. The 4-digit thesis is a possible destination. The documented institutional build-out is the confirmed path. Both can be true simultaneously, but they are different categories of certainty. Now the Fed decision, because this is the most important macro news of the week for crypto markets, and most people are not understanding what it actually means. Kevin Warsh held rates steady at 3.25 to 3.75%, the fourth straight meeting without a cut, and the forward guidance has shifted. Rate hikes are now being discussed before the end of 2026. Why? Inflation is running closer to 4%, significantly above the Fed's 2% target. The job market remains stable. When both conditions hold, elevated inflation and a healthy job market, the Fed has no mandate to cut rates. And Warsh has been clear that he will not cut until inflation is meaningfully closer to target. For crypto, the honest impact of this is real, but not catastrophic. Higher rates for longer means the cost of capital stays elevated. Risk appetite among institutional allocators stays constrained. The broad liquidity expansion that typically accompanies rate-cutting cycles, which has historically been one of crypto's strongest tailwinds, gets pushed further out. XRP dropped back from its attempt to break $1.30 resistance this week, partly on this news. The Iran deal bounce and the FOMC decision together created a classic buy the rumor, sell the news dynamic. We saw XRP push toward $1.30 and get rejected. The price is now back around $1.18 to $1.22. But here's the context that matters. The fundamental case for XRP does not depend on the Fed cutting rates. It depends on institutional adoption of XRP ledger infrastructure, which is happening regardless of rate levels. Franklin Templeton built on XRP during rate hikes and rate cuts. JP Morgan completed their live settlement at current rate levels. Ripple secured their DTCC working group membership at current rate levels. Higher rates for longer are a headwind for short-term crypto price action. They are not a barrier to the structural institutional adoption build-out that is the actual thesis for long-term XRP holders. One more development worth noting. Indonesia's Financial Services Authority is set to release real-world asset tokenization regulation in Q3 2026. And SBI Remit, Ripple's long-standing partner in Japan, is expanding its XRP-based international money transfer services into the Philippines, Vietnam, and Indonesia. These three countries combined represent a massive cross-border remittance market with hundreds of millions of people sending money across borders regularly. The regulatory clarity arriving in Indonesia in Q3 2026 creates a legal framework for exactly the kind of tokenized asset and payment infrastructure that Ripple's partnership with SBI Remit is positioned to deploy. This is another example of the documented, verifiable build-out happening in real time, not a thesis about what might happen, but a regulatory and partnership development that is actually happening on a timeline. Your full summary for today. The violent leaps thesis. XRP will not climb in a steady, comfortable line. When regulatory clarity, bank adoption, and tokenization volume all align simultaneously, the price action will be nonlinear and fast. Retail investors waiting for a comfortable, gradual on-ramp will miss it. Franklin Templeton's wallet vision. Your entire financial life moving into a single wallet where every asset is interoperable, optimizable, and connected. XRP is the engine for moving tokenized value in that ecosystem. Franklin Templeton has been building toward this for 7 or 8 years. JP Morgan Mastercard Ondo live settlement proved the XRP ledger delivers institutional-grade tokenized Treasury mobility in real time. Not a demo, a live transaction under 5 seconds. Fed kills 2026 rate cuts. Rates hold at 3.25 to 3.75%, rate hikes being discussed. Short-term headwind for risk assets does not change the institutional adoption thesis. Jake Claver, 4-digit thesis. The conditions are real possibilities, but not yet documented facts. The confirmed institutional build-out is the verifiable foundation underneath the bigger numbers. Indonesia Tokenization Regulation, Q3 2026. SBI Remit XRP expansion into Southeast Asia continues. XRP technical picture. Rejected at $1.30 resistance, back to $1.18 to $1.22. Key support, $1.19. Breakout trigger, $1.27. Critical floor, $1.05 to $1.08. Clarity Act, mid-July, remains the primary near-term catalyst. Stay informed, stay patient, and as always, stay verified.